How is everybody doing? Welcome back to another episode of The Banker Next Door. I am your host, Dr. Joe Berquist. Today, I wanted to talk to everybody about just some of the main risks that banks face day in and day out. And I came across this nice report that I want to bring up here for everybody. So, if anybody is not familiar with, there is a kind of like a correspondent bank out there called the PCBB. And the PCBB, they have this kind of this daily newsletter they call the BID Daily Newsletter. If anybody does not subscribe to this, I highly recommend it. It's a great little kind of 2-page newsletter that they do. They have kind of some details on like merger and acquisitions over here on the right. They give like key interest rates here. Great little interest rate chart there, just kind of let you know where the rates are at on a daily basis. And then they kind of have a topic that they run through. So the topic for today that they're focusing on is the OCC's Semiannual Risk Perspective, which gets published usually the beginning and kind of like the midway point of the year and toward the end. So they kind of like the spring and the fall is what they call it. So this was a report that was published back in December of 2023. We're going to take a look at that report in just a second here. But before we get there, I wanted to just break down some of the key risks that they point out. So what are some of the main risk areas that banks look at? Well, banks have credit risk. They have market risks. They have operational risks. They have compliance risks. Some of the other risks that banks have that we're not going to really get into here, but obviously liquidity risk is a big one. Interest rate risk is a big one. Capital risk. You have reputational risk. There's a lot of there's a couple. There's probably 3 or 4 or 5 other main risks aside from just these ones. But these are 4 pretty big ones here, and they'll go through. And then it kind of listed out. So credit risk. So with continued high interest rates, a prolonged period of inflation, increased risk in commercial real estate lending, and declining corporate profitability and cash flow, the OCC's report suggests that key performance indicators are showing signs of borrowing stress across various asset classes. So the potential for further economic slowdown will likely create further headwinds for credit quality, increasing risk in this area. For market risks, again, it says high interest rates have resulted in greater competition for deposits and at higher rates. Alongside reduced market liquidity, this is putting pressure on financial institutions' net interest margins. Operational risk as FIs seek to leverage the huge advances in technology to offer innovative products and services and further their digitization efforts. They are also facing increased threats of cyber attacks and fraud. And then finally, with compliance risk, it's operation in a dynamic environment. FIs need to ensure equal access to credit and fair and consistent treatment of their customers. These factors, combined with the increased use of new and innovative technologies and increased partnerships with third parties and fintechs, result in increased compliance risk, including risks linked to the Bank Secrecy Act and anti-money laundering, otherwise known as BSA and AML. So, and then if you scroll down, what are some of the things that they recommend? Obviously, risk ratings, regular stress testing of your loan portfolio, robust contingency planning, review cybersecurity measures regularly, relationships that you have with your third parties, with your vendors, report suspicious activities, and then obviously regulatory requirements. So these are basically all things that they say, the 7 R's of risk management, as it were, that can act as a useful reminder of what institutions should consider when reviewing and updating their risk management strategies. So let's take a look real quick. If everybody will hang with me for just a second here. I got to flip to another screen. Okay. Here we go. Okay, so this is the Semi-Annual Risk Perspective, and I will put a link to this report down in the description if anybody wants to go take a look at it. So again, this is from the OCC, the Office of the Controller of the Currency. And as we kind of go down here, we can see it starts out like an executive summary. It's got part 1, operating environment, part 2, bank performance, part 3, special topic and emerging risks of artificial intelligence. And then part 4 is trends and key risk areas, credit, market, operational, compliance, climate-related financial risk, and then part 5, supervisory actions. So we can come down here to kind of the executive summary. So what are some of the key takeaways here? So the overall strength of the federal banking system remains sound. Banks should continue to guard against complacency to ensure they maintain the ability to withstand potential future economic challenges. Recessionary pressures are easing, with the U.S. economy having proved more resilient than anticipated. Don't know about that. Excess consumer savings from the pandemic assistance have been declining. No, they're not declining. They're done. They're gone. Due to inflation and strong spending. Yeah, that strong spending is about to come to a halt too. Some key risk themes, obviously credit risk, rising deposits, operational risk, compliance risk. And they kind of go in and talk about more in there. And then you get into, like I said, the operating environment, and it's got some good charts and graphs and things in here. Quarterly average unemployment rate, home sales, cumulative excess holdings, some other good things. But yes, I'm not going to go through and just bore you to death with all the entire things here. The point being is that this is a pretty cool report. I think it's one of the better reports that the OCC puts out. And like I said, I wanted to talk about very briefly some of the main risks that banks look at, day in and day out. So, again, banks have credit risk, they have market risks, they have operational risks, they have compliance risks, they have liquidity risk, capital risk, just all, a lot of different risks and stuff like that. And then again, kind of the 7 strategies, risk rate your loans, do regular stress testing. You make sure you have robust contingency planning, review your cybersecurity measures regularly, consider your relationships with your third parties, also known as vendor management. Report suspicious activities, that falls into the whole BSA and everything, and then an AML, and then regulatory requirements. Communicating with regulators and keeping ahead of the development of new policies and regulatory frameworks is an important component of an institution's risk management strategy. So, just all things that banks should be looking at and considering as they're, running their business on a day-to-day basis. So, like I said, just something interesting I thought I would share. I'm sure I will get into these topics in more detail in the months and, probably hopefully years ahead. And that all depends on if you all keep listening. But anyway, but like I said, I thought people, like I said, would find this interesting. There'll be a link to this report down in the description below, and go check it out. And, again, throughout the year, as more, there's a litany of reports. Banks get killed with no shortage of reports. So there's a litany of reports that come out every year. And, I'll be sure to bring you guys a lot more updates on a lot more of the key industry reports and analysis that come out throughout the year. So, but like I said, hope everybody checks this out. Hope they find it interesting. And, see you guys again real soon here. Thanks.